China's carbon trading market has finally gone online, covering 4 billion tons of CO2 emissions. It's effectively the world's largest market of its kind, overtaking the EU. Europe launched the world's first emissions trading system in 2005, mainly targeting power generation and manufacturing. To accelerate the bloc's push towards climate neutrality, Brussels has now proposed extending the scheme to include more industries, as Tony Waterman reports.
Europe was really on the cutting edge of carbon pricing 16 years ago when it introduced the world's first emissions trading system, putting this cap on emissions and essentially forcing companies to pay to pollute. The program right now mainly covers the energy and manufacturing sectors, which are traditionally some of the dirtiest industries out there. But by limiting greenhouse gas emissions, this has driven up the cost of doing business for some of these firms. So they have very quickly learned to adapt. For example, the French energy giant Engie, it has committed to ending coal-fired power generation and to increase the overall share of renewable energy. Chemicals giant INEOS, in just the past week, has announced a new carbon capture and storage initiative to suck these harmful planet-warming emissions out of its production process. The company says that it could sequester up to 100 million tons of CO2 by 2027. The project, though, is still very much in the early stages, but it could be tested at the company's petrochemicals plant and oil refinery in Scotland, which is part of a joint venture with PetroChina. These adaptations, while they are expensive for these companies, are paying dividends. Brussels says that emissions are down nearly 43% since the ETS launched, and it now wants to extend the scheme to other sectors as Europe strives to be climate neutral by 2050.
We know that carbon pricing works. The principle is simple. Emission of CO2 must have a price on CO2 that incentivizes consumer, producers and innovators to choose the clean technologies, to go towards the clean and sustainable products.
In the coming years, the maritime industry, so shipping, cruise ships, it will be added to the mix, and the free allowance that the aviation sector has been enjoying will be phased out. A separate carbon market is also going to be created to cover road transport and home heating fuels. This could drive up costs for consumers, and it is already hitting stiff opposition. But if Europe is to meet its ambitious climate targets, the path to getting there will have to be equally, if not more, aggressive.